Welcome to Know What You Are Investing podcast, where we decode the world's top companies, what they do, how they grow, why it matters. Today we break down Salesforce Q2 FY26, revenue beat at $10.24 billion, expanding margins and a step up in guidance. We'll unpack how Agentforce and Data Cloud are powering the Agentic Enterprise, why customer wins like DIRECTV, PenFed, and FedEx matter, and what the new $20 billion buyback signals. We'll also cover the watchouts, marketing and commerce softness, UK and Japan deceleration, and questions on the durability of AI-driven growth, so you leave with a balanced investor view. Let's dive in.
Welcome to Know What You Are Investing podcast. We decode the world's top companies, what they do, how they grow, why it matters. Today, we're pulling back the curtain on Salesforce's recent Q2 FY26 earnings call. This isn't just about, parsing quarterly reports. It's really about understanding the strategic shifts and the underlying momentum of one of the enterprise software giants. For anyone tracking CRM, this deep dive offers a shortcut to understanding the critical insights driving their future.
Absolutely. Our mission today is to distill the most vital information from Salesforce's latest financial update. We'll explore not just the numbers, but the strategic shifts, the, surprising growth engines, and also the potential challenges that investors should be keenly monitoring, trying to paint a complete balanced picture of where the company stands right now.
All right, let's unpack these Q2 financials then. Salesforce delivered some undeniably strong results. What were maybe the 2 or 3 metrics that truly stood out to you as indicators of Salesforce's underlying health and sort of strategic direction this quarter, beyond just the headline revenue number?
Yeah, what immediately jumps out is the consistent strength across their performance. Salesforce reported $10.24 billion in revenue for Q2. That's a solid 10% increase year over year, or 9% in constant currency. But it wasn't just top-line growth. I mean, they achieved impressive non-GAAP operating margin expansion to 34.3%.
Right.
And the GAAP operating margin, that was up a significant 370 basis points year over year to 22.8%.
Okay.
And this marked their 10th consecutive quarter of operating margin expansion. For investors, this isn't just a good number, it's a powerful signal. 10 consecutive quarters tells us that Salesforce is, maturing beyond a pure growth at all costs strategy. They're demonstrating robust operational discipline and a clear commitment to sustainable, profitable growth, which, frankly, in today's market can be even more attractive than just pure top-line acceleration.
That consistent strength certainly paints a positive picture.
Yeah. And beyond the quarterly performance, they also updated their full-year guidance, right? That's always a critical indicator of management's confidence. How did their updated projections for the rest of the fiscal year reflect their true outlook?
That's correct. And the guidance, it did reflect sustained optimism. Management raised the low end of their FY26 revenue guidance to $41.1 billion. The high end stayed at $41.3 billion. So this suggests approximately 8.5% to 9% year-over-year growth. Still pretty solid. They also increased their non-GAAP operating margin guidance slightly to 34.1%, and notably raised their annual operating cash flow growth guidance to a healthy 12% to 13%. That was up from their previous 10% to 11%.
Okay.
So this isn't just a small tweak. It underscores confidence in continued growth, but maybe more importantly, a sustained commitment to improved profitability and cash generation. And those are key for long-term shareholder value. That focus on profitability is definitely clear. Now let's talk capital allocation for a second. How are they balancing these, growth investments with shareholder returns? It's a crucial question for many investors looking at where their capital is being deployed.
It really is, and this raises an important question for long-term investors looking at capital efficiency. Salesforce returned a, substantial $2.6 billion to shareholders in Q2 alone. That was through buybacks and dividends. Crucially, they also announced a new $20 billion expansion to their share repurchase authorization. That brings the total authorized to an impressive $50 billion.
Wow, 50.
Yeah. Management emphasized what they called a balanced approach, which includes disciplined M&A like the Informatica acquisition, though, its timing is a bit variable alongside these significant shareholder returns. They view their sort of trinity of capital allocation as buybacks, dividends, and strategic inorganic innovation. They even pointed to recent smaller acquisitions like Convergence AI, Bluebirds, Y, and Regrello as examples of targeted innovation that fuels their broader strategy.
Okay, so that covers the financials and capital return. Now, this is where the long-term vision really comes into focus.
Yeah.
The strategic narrative. Marc Benioff spoke extensively about the Agentic Enterprise and the surging momentum of Agentforce and Data Cloud. What exactly does this Agentic Enterprise mean for, say, a business leader or an investor? And what kind of impact is it genuinely having on their product portfolio and, maybe more importantly, their customers?
Right, the Agentic Enterprise, it's Salesforce's bold vision for the future of business. And it's not just an incremental upgrade. They really see it as a complete transformation. Imagine a world where humans and AI agents work collaboratively, with every single decision grounded in trusted, harmonized data.
Okay.
This is meant to fundamentally reshape workflows, empower employees, and ultimately, well, reinvent how businesses operate. The real insight here for investors, I think, is how this vision strengthens Salesforce's competitive moat. By deeply embedding AI and trusted data at the core of every customer interaction, they're creating an incredibly sticky ecosystem.
Right, harder to leave.
Exactly. It makes it far harder for customers to switch and for competitors to offer a truly comparable integrated solution. It really solidifies their long-term market leadership. And this vision is clearly underpinned by significant momentum in their AI and Data Cloud offerings. Their AI and data product line, which includes Data Cloud and Agentforce's ARR, that's annual recurring revenue, it's up an astonishing 120% year over year.
120%.
Yeah, already reaching $1.2 billion in Q2 alone.
Wow. Okay, 120% growth is incredible for that segment. Let's dig deeper into Data Cloud and Agentforce specifically. What are the key performance indicators that really highlight their impact?
Well, Data Cloud itself saw 140% growth in customers and a remarkable 326% growth in what they call rows access by zero-copy integration.
Zero-copy integration, what does that mean practically?
Yeah, for you, the listener, zero-copy integration essentially means customers can now access and utilize their critical data directly within Salesforce's Data Cloud without having to copy or move it first.
Yeah.
This makes the whole process much faster, more secure, and far more efficient for leveraging that data for AI and analytics. It really eliminates a major pain point for enterprises. And get this, over half of Fortune 500 companies are already utilizing Data Cloud in some capacity.
Half the Fortune 500 already.
Yeah. And then Agentforce, their AI agent platform, has secured over 6,000 paid deals in just 3 quarters.
It's 1,000.
With 40% of new bookings coming from existing customers who are expanding their investment. So it's not just new logos. They've even rolled out flexible payment options like pay-as-you-go and flex credits to lower adoption barriers, showing they're serious about broad adoption. This isn't just about selling new products, it's about making their entire ecosystem more powerful and, frankly, indispensable.
Those are some really impressive numbers, but can you give us some tangible examples? How is this Agentic Enterprise actually playing out with real customers? Specific wins always help paint a clearer picture of the real-world benefits and, the return on investment.
Oh, definitely. The immediate measurable impact these technologies are having across various industries is truly fascinating. For instance, DIRECTV. They saved billing reps nearly 300 hours of inquiry handling using Agentforce. An employee AI agent executed 50,000 actions in a single week.
50,000 actions.
In a week. And they went from pilot to production in just 2 months. That's incredible speed and efficiency.
2 months, wow.
Then there's PenFed. They're projecting millions in annual savings by using Agentforce in loan underwriting. That demonstrates significant cost reduction potential. Reddit saw a dramatic reduction in average resolution times. Get this, from 8.9 minutes down to 1.4 minutes.
Huge difference.
Massive improvement in customer service efficiency and, user satisfaction. Williams-Sonoma started with Agentforce for just 1 brand, then quickly rolled it out across 8. They even created a sous chef agent for customer guidance on recipes.
A sous chef agent. That's creative.
Right. Highlights the expansive use cases. FedEx unified their data with Data Cloud and reported a, quote, double-digit increase in the percentage of customers who signed the contract and proceeded to start shipping. That led to significant savings by basically accelerating their customer acquisition funnel.
Okay, so faster time to value.
Exactly. And one more, in Latin America, retailer Falabella solved their "Where is my order?" inquiries, increased their NPS by 10 points, and dropped call volume by 25%. They actually tripled their Agentforce business after just 2 months of initial deployment. These aren't small, isolated cases. They're demonstrating clear, quantifiable value and rapid expansion after the pilot phase.
Wow, those are some really tangible results. Saving 300 hours, millions in savings, massive NPS jumps. I mean, it almost sounds too good to be true in some ways. What's the common thread here? Is it purely the tech, or is there a specific implementation strategy that's making these customers so successful so quickly?
That's an excellent question, and I think While the technology is certainly powerful, the common thread is often Salesforce's ability to seamlessly integrate these AI agents with existing workflows and crucially trusted data. That makes the impact almost immediate. It's really about augmenting human capability, not replacing it, and ensuring the data is clean and accessible. That seems key.
Right.
This is also why they're seeing success across a broader range of customer sizes. Salesforce isn't just chasing the biggest whales, they've outlined a clear 5-segment strategy to capture growth across the board, from their largest enterprise clients right down to the mid-market.
That makes sense. So beyond these big-name customers, are there other market segments showing particular promise for this agentic transformation? It sounds like there's a broader play here than just the largest enterprises.
Yes, absolutely. We heard specifically about significant momentum in their small and mid-market businesses, those with 0 to 5,000 employees. Here, AI isn't just an upgrade. They see it as a transformative tool, essentially turning every entrepreneur into a kind of super entrepreneur by vastly expanding their capabilities. This shows a more diversified growth engine than some might assume.
Okay.
And in the public sector, they finalized an agreement with the U.S. Army. This includes a digital front door project for Human Resource Command, providing 247 service and support to soldiers and veterans. The availability of Agentforce for the public sector with FedRAMP High certification is a key enabler here.
FedRAMP High, right. That's a big deal for a government contract.
Oh, absolutely. Huge deal. That certification is incredibly important. FedRAMP High is a rigorous U.S. government standard. It allows Salesforce to offer its services to federal agencies dealing with highly sensitive data. It essentially unlocks a massive and very security-conscious new market, demonstrating their commitment and capability to meet that highest security bar. They also announced the upcoming launch of an agentic IT service platform, specifically targeting the broad Slack user base, which, remember, boasts over 1 million customers.
A million Slack customers, yeah.
This aims to transform IT service management, ITSM, for their existing customer base, further expanding their reach and utility.
That's an incredibly ambitious vision, and the customer examples are certainly compelling. But, earlier you mentioned an undercurrent of skepticism from analysts. How do we reconcile that bullish management outlook with the market's maybe more measured view? With all this positive momentum and grand vision, it's important for investors to also look at potential risks or areas of concern. What did the earnings call reveal on that front?
Yeah, that's the balance, right? This raises an important question about sustainability and market dynamics. While the overall picture was strong, management did identify some specific weaknesses. They noted slower growth in the marketing and commerce segment. That was up only 3% year over year in constant currency, which is a slight deceleration from the prior quarter. So that's an area to monitor for potential drag on overall growth.
Okay, 3% is quite a bit lower than the overall growth.
It is. There was also measured performance in certain geographies, notably the UK and Japan, which were described as constrained. These regional slowdowns are certainly worth watching.
And on that note of market skepticism, is everyone as enthusiastic as Salesforce management about this AI-driven growth? Or are there genuine questions being asked about how real or how fast this will impact the top line?
That's exactly it. The sentiment analysis from the poll indicated a sort of neutral to slightly positive tone, with an undercurrent of skepticism about the scale and timing of AI-driven acceleration among analysts. There's definitely a market skepticism about the sustainability of this AI-driven growth. Analysts are questioning whether accelerated bookings will genuinely translate into durable top-line revenue growth in the near term. It's a valid concern, right? How quickly do these impressive pilot projects and efficiency gains actually manifest as new, incremental, and consistent revenue streams?
Yeah, show me the money, basically.
Pretty much. Marc Benioff himself acknowledged a strange narrative and even called it nonsense out there, questioning the future of SaaS or the impact of AI. But he firmly asserted that what Salesforce is doing is an extension of SaaS through agents, not an elimination. And Robin Washington, their CFO, also emphasized the company's confidence in their strategy to monetize AI effectively. So it's clear they are actively working to address this skepticism head-on.
Okay. Any other operational or strategic uncertainties that came up during the call that investors should maybe be aware of, perhaps regarding future plans or acquisitions like Informatica?
Yes, there were a couple of key points there. The variability in the timing of the Informatica acquisition was noted. Salesforce now expects it to close in Q4 FY26, or potentially early FY27.
So, crisped back a bit.
Seems like it. And due to this uncertainty, they've explicitly excluded its contribution from the current guidance. This indicates that while it's clearly a strategic acquisition aimed at enhancing their data capabilities, its immediate financial impact isn't yet factored into their near-term outlook.
Right.
There was also a mention that current remaining performance obligation, or CRPO, growth would continue to be impacted by the cumulative effect of measured sales performance that started way back in Q2 fiscal year 23.
Ah, okay. So a lagging effect.
Exactly. It suggests a lingering effect from past sales performance on future contracted revenue growth, even as bookings seem to be strengthening now. It indicates that some of the earlier headwinds are still working their way through the system.
Okay, let's bring this all together for you, the listener. Considering both the impressive strengths, the financials, the AI momentum, and these acknowledged challenges and skepticism, how should an investor view Salesforce going forward, especially through the lens of this whole Agentic Enterprise vision?
Fundamentally, I think Salesforce's vision of the Agentic Enterprise, powered by its robust data cloud foundation, appears to be a genuinely transformative strategy. It's not just hype. The compelling examples of customer adoption and the measurable efficiency gains they're delivering strongly suggest a powerful long-term growth driver. And the focus on leveraging AI to extend, rather than replace, existing SaaS capabilities, that's a critical nuance here. It positions AI as an accelerant for their core business, not something totally separate. They are aiming to rebuild every product to be agentic, creating a truly unified operating system for their customers. This isn't just about adding new features, it's about fundamentally increasing the value and, importantly, the stickiness of their entire platform.
Given that ambition, what's the next big event or indicator we should be watching for? Something to get an even clearer picture of this transformation in action.
Yeah, the big one is the upcoming Dreamforce conference in October. That will be a critical showcase. Management plans to unveil Agentforce version 4, the new agentic IT service platform we mentioned, and they'll feature dozens of customers, including major names like Dow, FedEx, Accenture, Smartsheet, Williams-Sonoma, Pfizer sharing their own agentic enterprise journeys.
Okay, so real-world proof points.
Exactly. This event will provide crucial insights into the real-world adoption, the scalability, and the actual impact of their AI and Agentforce offerings. It could be a significant catalyst for market understanding and sentiment, potentially converting some of that analyst skepticism into, well, bullishness if the stories are strong enough.
Right. Makes sense. And looking beyond Dreamforce, what are the key things for investors to monitor in the next quarter or two to really track Salesforce's progress and the realization of this vision?
Okay, in the short to medium term, I think investors should closely monitor several factors. First, pretty obviously, AI monetization. How effectively does Salesforce translate those impressive pilot-to-production conversions and the increased consumption into tangible top-line revenue acceleration? That's key, especially given the analyst skepticism about the pace.
Got it. Revenue translation.
Second, geographic performance. Keep a close eye on growth trends in those softer regions like the UK and Japan, and see whether the strong performance in the US and other robust EMEA markets like the Netherlands and Switzerland they mentioned can effectively offset these weaker spots.
Okay.
Third, M&A integration and regulatory risks. Watch for the smooth integration of Informatica once that acquisition finally closes, along with those other recent smaller strategic acquisitions. And, of course, keep an eye out for any potential regulatory hurdles that might arise, especially with AI becoming more prominent.
Right, integration is always key.
And finally, segment performance. Watch for improvements in that marketing and commerce cloud's growth rate. See if it picks back up. And look for continued strength in those mid-market and public sector wins, which they've highlighted as key diversified growth drivers. These will be a true test of their execution against this ambitious agentic vision.
Salesforce is clearly navigating a really pivotal moment, riding this massive AI wave with a bold, transformative vision. It's a compelling story, no doubt, pushing the boundaries of what enterprise software can achieve. But as we've discussed, the devil's always in the details and, ultimately, the execution. Keep a close eye on those specific metrics and upcoming milestones we've outlined, because the Agentic Enterprise, whether fully realized tomorrow or still evolving, is undoubtedly reshaping how businesses will operate. It's creating a future where humans and AI agents work side by side. Thanks for your listening. Know What You're Investing podcast. Decode the world's top companies, what they do, how they grow so, why it matters.
That's our Salesforce Q2 FY26 recap. Solid execution, rising AI monetization, and a clearer path toward the Agentic Enterprise, with risks to monitor in marketing and commerce, regional momentum, and informatica timing. Thanks for listening to Know What You Are Investing podcast, where we decode the world's top companies, what they do, how they grow, why it matters. If this was useful, follow the show and share with an investor friend. See you in the next episode.